Hi everybody, Mike White here. How are you? Welcome to the January call. It's great to be here. Hope everybody had a great holiday season. Hope everybody was healthy and happy and had a wonderful time with their friends and their family. I certainly did, and I appreciate all the well wishes, and I hope you all really enjoyed that time. But here we are. We're back to the reality of going back to work and facing a new year and things that we're going to do to try and make ourselves better. And I'm really excited about this year. I'm really excited about what we're going to do. Looking at the numbers from people throughout this year, I am absolutely thrilled at the improvement that people have made and the encouraging signs of how we're growing, not only as an industry, but here on this little piece of it, this call, the number of people grows on a regular basis, and I couldn't be more thrilled that we're going and we're growing and people are thinking to share, so I appreciate all that. We're going to start this year off with something that I want to share with you, and something that I covered a little bit in a blog post, but I really wanted to get really deep with this with you guys. And I've got some things at the very end of this that I'm going to share with you that I want you to pay attention to. So if you have to leave early for whatever reason, just make sure you pick up a copy of the recording and get to the end, because there's some things at the end that you're going to want to go and have access to. So what I really want to share is some tricks of the trade, or what I call 6 ridiculously simple steps to premier production, because I work with a lot of really talented people, and some of them are, by any measure, top producers in our industry. And some of the things that top producers do on a regular basis, almost by intuition or seemingly without thinking, often starts with having learned to do some things very early on in their practice. And if you look at the people who are top performers, a lot of these traits and tendencies and things tend to be in common. And so what I really wanted to do is share with you some of the things that I have derived from a lot of the people that I work with, and understand that some of the times the people who become the top producers, they didn't start out closing a lot of loans every month. They start out like everybody else, at the beginning. And one of the things that I've come to find in the mortgage business is this isn't about, building the next top producer. This is largely built about teaching people how to be that $40, $50 million a year producer, almost, subconsciously, almost casual in the outcome, without the stress and without the drama that many of us find. In fact, you look at some of the people who do 20, 30, 40, $50 million a year, they don't work anywhere near the number of hours as some people who do far more, who do far less loans and work far more hours. So a lot of this thing has to be on purpose and with focus. And that's what I'm hoping to share with you, some basic fundamentals that we can look at. You've probably heard it all before, but I really want you to take a hard look at yourself and your business practice to see if your systems and the things that you're doing measure up, so that we can get to those levels. And some of these things are also reminded to me by you. So for those of you who have made these suggestions to me and said, I find this works great for me, or that works great for me, I want you to really take into consideration my deep appreciation for you sharing that information with me. Because again, you can only coach people and hope they do what you ask them to do, and you can only hope that they take it and they execute the plan according to the design, and then all you can do is live with whatever the results they tell you that they have received. So for those of you who send me the emails and share the stories with me, as always, I am deeply appreciative of the fact that you do that. And for those of you who will see your suggestions and your situations appear on the screen, know that I'm listening. So let's get started. The first step on what we do is contacting people. I mean, really simple is if you're not closing the numbers that you want to close, it's because, quite frankly, you're not talking to enough people. And we really need to break this down into really, really simple terms, because that's what this is. Every one of us has a ratio. And those of you know I've talked about this on, and I'm going to bring it up again, because often these fundamental steps get kicked to the curb when we start doing a little bit better, and we stop looking at ourselves, and we forget to do the simple math. Do we really keep track of how many contacts we make in order to pull a credit report? Do we really track the number of credit reports that we pull that leads to an application? Are we really following the number of apps we write and comparing them and submit and track them against the number of loans we close? Because quite simply, if we're not doing those things, then how are we ever going to reach the goal? We sit there and we have these goals, and I'm sure all of us have been through business planning, and we've talked about this, is, hey, what's the goal for the year? How many days am I going to work? It's a very simple mathematical equation. Divide the number of contacts I need to make into the number of days I'm going to work, and you will know exactly how many people you need to speak to on a daily basis to succeed. Now, I know this sounds highly simplistic, and it is. It absolutely is highly simplistic. And I beg you to understand that in the mortgage industry today, the fundamentals is what's going to get you there. So for any one of you who's not already closing 20 to 25 loans a month, take a look at your fundamentals. Take a look at these basic principles. Because the more ingrained you get in the fundamentals and the principles, and you know the mechanics behind what you do every day, the more likely it is that you're going to be able to make the adjustments that you're going to need to succeed. And we're going to go through that because, again, here is what I have learned from you and others about how they've gone from 2 or 3 or 5 loans a month to 7 to 10 to 15 to 20 loans a month, and have put that through the filter of the people who are doing 20 plus. I've got some people doing 35, 40 loans a month. It's amazing to me. And they will tell you it's not as big a challenge as you would think if you have set the fundamentals in place. Because every action and every task is clear and it's understood, and they know where it leads to. The second step that we're going to be involved with is reviewing credit and documentation. And, I like to call them the big 5. The big 5 that keep your business alive are W-2s, tax returns, pay stubs, bank statements, and a tri-merge credit report. This is the fundamental building place of where we start. The documentation part that we have to ingrain ourselves with absolutely beats the conversation. All the conversation in the world is not going to help us if we don't have the proof behind what it is we're doing. I spoke to a loan officer just this morning who had a loan and has been a loan officer for a long time, has done very many loans. And they were in a position where the one borrower was a teacher and the other borrower worked for the post office. They both were W-2'd people. They had jobs. They went through the conversation trying to pre-qualify them for their loan. They pre-qualified them based upon the information that they had gotten. And lo and behold, they made an offer on a property, and the offer was accepted, and we go down the process. And when the tax transcripts come back, they have rental properties. Now, The loan officer didn't read all the pages of the application. They didn't ask all the questions. They made some assumptions, and it ended up being a big problem. Now, thankfully, it got worked out. But that is something even a veteran loan officer can fall into the trap of casually thinking that any of these documents or any of these items is something that we don't need. Because that loan officer just said to themselves, they're both salaried W-2 people, I'm not going to need the tax returns. It's very straightforward. And had they asked the question about, do you own other properties that are clearly is on the 1003, they would have been told, hopefully, that they had other properties, and then the tax returns would have become mandatory. But the challenge there is we sometimes get complacent, and that becomes a problem. So understand that reviewing your documentation and making sure that you're crystal clear on the items that you're looking for and when you do it. Now, this becomes a discussion. Some people I have will not even entertain a pre-approval or much of a conversation at all without the W-2s, tax returns, pay stubs, bank statements, and a tri-merge credit report. They won't have a conversation at all, and I encourage that. I encourage all of you to speak to the client as little as possible until you've convinced them that you need to speak from fact and not fiction, that you need to be able to diagnose their situation based upon the very documentation that they're going to supply you to get approved. So I strongly suggest to people that you have these things before you engage more than 10 or 15 minutes of time so that you know whether you have a deal going forward. Now, some people will make the case that they would rather have an initial conversation with somebody and, if they can, just pull credit, because based upon the initial conversation and the credit report, they'll see even more. And I guess I can understand that. And hopefully, in most cases, based upon their conversation with the client, that they've asked the right questions, that the credit report will support what the conversation was, and that the following documentation will also support the conversation and prove to be the type of loan that you can do. However, every time you move reviewing the documentation out another generation of conversation, you run the risk of it being a bigger and bigger calamity that you could have prepared your client for. They have less understanding when you have to reject a loan or tell them that they can't do exactly what they wanted, the further down you go, because these are some things that you should have known. And so for me, especially with new people, I tell the new people, don't spend more than 10 or 15 minutes with anybody until you've had the conversation about documentation, because everything is a theory. For those of you who know me, you know that I often use the saying, documentation beats conversation every time. I've said that over and over and over again, because in this marketplace and in this reality, you're not going to get away without it. The other saying that I like to use and have my clients use with their customers, that offering a prescription without examination and diagnosis is malpractice. Just like your doctor, or you call the doctor on the phone and they've never met you, and you said, hey, doc, I have this problem, I need a prescription for this to take care of it, the doctor's not going to call in a prescription for you. First of all, you're not going to speak to the doctor live. And secondly, without examining you and seeing you and making their own determination of the facts, they're not going to supply you, or at least ethically they shouldn't. Well, you're in the same position. You need to look at this and say to yourself, again, I know more about lending than the people that I'm speaking to. That's why they came to you in the first place. So being specific and telling them how they can go through this the easiest possible way. To me, W-2s, tax returns, pay stubs, bank statements, tri-merge credit report. If you're not getting those early, you're opening yourself up to challenges down the road. Step number 3, and this is, should go without saying, but it often becomes the one that becomes the one that gets left out, is presenting options. And there are some loan originators that get into a bad habit of the customer comes to them and they're going to go buy a house and they talk about getting a 30-year fixed, and so they get in their head that this is the customer, they want a 30-year fixed, and so they get themselves built around 30-year fixed, where a customer will come in and say to them, I want a 30-year fixed and I don't want to pay a lot of closing costs, or I don't want to do this, or I don't want to do that. And a lot of times what will happen is the loan originator will present scenarios all built around what the customer specifically has asked for. And there's nothing wrong with that, but there should always be options. You should always give them more than one way to get there. 3, 4, 5 different scenarios that works. Even if you threw in a different term loan or a different rate and closing cost scenario built around the same loan, they don't know what's available to them sometimes. Sometimes they're asking questions based upon a little bit of knowledge. And you and I all know that a little bit of knowledge can be a very dangerous thing. Sometimes they have a friend or they have a relative that has told them something that may have made sense in their situation or may have made sense at a far earlier time on a completely different set of circumstances, and may absolutely not make sense in today's marketplace or for this particular client. So looking at their options is make sure, if they qualify, what are the number of different scenarios these people could qualify for based upon the information that you have. Because that can be a really big deal. Sometimes people don't know, and what they don't know can often hurt them. The other part to this is if they accept one of the scenarios that you put forward, make sure that you really have spelled out to them what happens next. One of the things that I have found amongst some of the better producing people is they have a really good entry into the process. They do a really good job of creating and setting the expectations. They present a really good path on how somebody gets from where they are to where they're going. If it's going to be a loan, they explain the timeline. They show them how they're going to reach their goals and what needs to take place. They do a really good job explaining what the client should do and shouldn't do. And if, for those of you who have ever been in a situation, and I'm sure all of us have either been there or seen it, where the client has decided to switch jobs in the middle of the application process or quit their job or decided to retire or, go open up a whole series of credit cards or go charge a house full of furniture, those of us who have been through that can really understand and sympathize with the fact that even if we explain to our clients not to do those things, sometimes they're going to do them. But I guarantee you, if you don't explain for them not to do it, it makes the situation even more precarious. Because if you have that out in front of them, you always have, well, what do I mean I don't qualify for the loan? Well, what do you mean you went out and quit your job? Seriously, it happens more than you think. And people just assume it doesn't matter. Well, you and I know that it doesn't, that it does. The other part is how we handle people who don't qualify. how do we incubate these people, if we incubate them at all? And one of my things is there's no reason, no matter how bad the customer looks on paper, no matter what the circumstance, whatever, there's never a reason to humiliate a customer. Always present the pathway to success. I don't care if they just came out of, they just got their house foreclosed yesterday. There's a pathway to which they can buy their next home. There are things that they can do. And if you look down at the bottom of this slide, and you know the logo, the motto of my company, which is do something today that improves your tomorrow. It takes you 5 minutes to be nice to somebody who doesn't qualify, to be upbeat with somebody who's not in a position to buy right now, to encourage them to follow a path, to set in front of them the things that they can do to succeed. Now, you and I both know that the people who don't qualify largely are not going to follow the plan. It's not likely they're going to get all the way to home buying, because we all know some people are just not meant to be homeowners. But you don't get to choose the people who could succeed. So be nice to them. Offer them a path. And then understand, in either case, we need some sort of an incubation system for people who qualify right now who aren't going to buy right now, or for people who don't qualify right now who are going to buy in the future. The big key word here, well, there's two of them, scenarios and incubate. Are you presenting the scenarios to your people? Yes, including what they want, but also paying attention to the things you know they could possibly do. And then the other part is incubation. What am I doing with these people? If they're pre-approved, do I automatically call them every Thursday to see if they're seeing property, right? Or any other day of the week, whatever day of the week that you want to call and put into your schedule. If these people are pre-approved and you're not speaking to them weekly and asking them the question about seeing property, you start to lose control over the deal. If they're not seeing property because of, certain legitimate reasons, that's fine. But what if they're not seeing property because the realtor hasn't called them back? Now it gives you a chance to get a hold of that realtor and say, hey, what's going on here? These people are pre-approved. They want to see property. Show them something. Because sometimes the realtors will drop the ball. Other times, they forget. They get into the hype of looking at houses, and then something happens in their lives. And for a period of time, they forget that they were even thinking about buying a house. A simple phone call can remind them, oh, yeah, we were going to go ahead and do that. So you need to have the path for everybody to succeed. And again, especially those people who don't qualify. I cannot emphasize too strongly how little it takes for you to be nice and offer them a way, and how that can come back to seriously improve your business and find you, quite honestly, somebody that refers you to a multitude of people. I've got cases where that has happened. I have one loan officer in their particular marketplace. Houses were going into short sale and foreclosure at an alarming rate. And a couple of years ago, we started working with these people, and we were being nice to all of these people, and we incubated all these people, and we put them on a path to buy. And guess what? Those people are now showing up because the time has gone, and now they can do something. But the issue here is not only are they buying now, but even back then, a few years ago, because my loan officer was nice to them and took time to provide them a path, they were getting referrals from this person of other people who either were short sale people or people who were just looking for help, friends or family members. You never know where opportunity is going to come from. So make sure when you're presenting options, you don't do it in a biased way, either because of something the client said or your own stereotype, because you cannot assume that this client may not benefit or will not succeed. So just keep that in mind. Step 4. All of you pay good attention to this one. What do really good loan officers do that ones that want to be good loan officers but aren't there yet don't? A lot of them, boy, complete a perfect loan application. For those of you who are ever running around chasing documentation, going crazy at the last minute trying to find something, hearing complaints from the customer why they need all this, additional paperwork at this late date, a lot of it comes from the fact that you could have done it better up front. One of the top performing loan officers I do business with gave me some very interesting information, because I asked her, I said, people ask you, I know they ask you all the time about your success and how you succeed. Have you had one thing that you could tell somebody, the difference between you being highly successful and being where the average loan officer is? What was it that broke you out of the normal and moved you down the path of exceptional? And she didn't hardly hesitate for a second. She said, the day that I learned to turn over absolutely perfect loan applications into processing so that I didn't have to chase paperwork down the back end of these files, freed up my life. And she said these words to me: learn your craft and get it right. A few extra minutes up front saves hours in the back. That's one of the hugest statements that you can get. You will not find a highly successful loan officer who's running around chasing documentation. It just can't happen. You can't do enough business. It takes too many hours. So spending 10 or 15 or 20 minutes up front in your applications, making sure that they're bulletproof before you turn them into processing, is going to save you in the long run. And please, don't accept lack of cooperation. Don't own that. The client not performing or the realtor not getting you a contract or somebody not doing their job, don't own that. Engage that circumstance and share with them how you're not going to be able to meet their goals, not your goals, their goals of a smooth and hassle-free closing if they're not going to provide the information that you need. Because without it, it can't go forward. If you've got a particularly challenging client, then leverage the other professionals in your deal. Or if it's a refinance, leverage the rate lock. In other words, hey, I've got people and I've got some companies that I do business with, some of you on this call, your company will not allow you to lock in a loan until you have a complete application. Until that application has been received and acknowledged as being complete, they don't even let you lock in the loan on a refinance. Why? Because they don't want to tie up their pipeline with a loan that's not going to close. Now, that's not all of you, but some of you understand the logic in that. I can understand the logic in that. So if the client is worried about rates going up, they'll hurry up and get you the documentation you need so you can complete the app and put it into processing. Same thing with a purchase. If your client is not delivering back to you what you need, engage their realtor and say, look, we're going to be off timeline. Without the documentation I need from the client, we're going to very quickly get off course, and we may be in jeopardy of making the closing date. And I need you to explain to the client how important that it is that we stay on schedule. And sometimes your best ally will be that realtor. Now, clearly you can't go to the other side, somebody who doesn't represent them and tell them, things that you're not legally able to tell them to do. But you can certainly engage their own realtor and share with them the fact that this loan is not proceeding as it should be because the person has not been cooperating on the transaction. The other thing I want you to do is be keenly aware that I don't care how well you know the rules, and I don't care how well you think you know the guidelines. Nobody ever wins an argument with an underwriter. Nobody. The worse you get in there, the worse you make the situation, the less likely you're going to get cooperation. So if you've got a scenario, you know what the rules are going in, trying to skirt the rules and then trying to make the argument that that document or that form or that something is not necessary is probably the worst thing that you can do. Now, I'm not saying that underwriters can't be wrong or may have misinterpreted a requirement or some of the information. But confronting that particular underwriter headlong is probably not the way you want to go about it. You probably will benefit from another set of eyes. Your sales manager, the underwriting supervisor, talking to your processor, something might be a better way of looking at this and doing that. And sometimes it's just better to, even if you're right, concede the point, supply what they ask for, and let's move on. Because all the time arguing the point doesn't create anybody that wins. Because if you think you're going to wear down that underwriter who's going to sign their name to that loan when they are clear in their mind and set that they require something, good luck with that. Because I don't think it's worth your time or your trouble. That I would rather just make sure that I met the requirement. And if the requirement's not, in a position where you can meet it, if there's something that doesn't exist so you can't supply it, then I strongly suggest you sitting down with your processor or your sales manager or somebody and having the conversation about how we represent this file or this scenario, or get in touch with an underwriting supervisor or something and seeing if there's another way that we can go. But flat out having a loan officer argue with an underwriter, just a really bad situation. Step number 5, understand loans that close on time make everybody happy. And we have gone down this road, a multitude of times. I have shared with you the 30-day process till I'm blue in the face. Back out your 30-day timeline first. Set the expectations and hold everybody accountable to the outcome. Keep in touch with everybody involved in the deal and celebrate each victory. And share the joy of closing. Well, what does that mean? Establish your timeline and get everybody involved in it. Again, some of you are closing loans at different rates of speed. But for argument's sake, let's just say we know the timeline is 30 days. And you've heard me say over and over and over again, if we're closing in 30 days, I would expect the wire to be there on day 29. I would expect that you reviewed the HUD on day 27. And I would have expected you had your clear to close on day 23. You can continue back from there. For those of you who don't remember this, go back to the information that you have in the 30-day process and reread that. Because not only is it good business, but there are prospecting opportunities along the way. If you execute that system, you're going to have loans that close on time, and you're going to have people that are happy, which is going to lead to referrals, and it's going to lead to new referral partners, because that level of service is not enjoyed by very many people. The next part is set expectations and hold everybody accountable. Day 1 or day 2 upon receipt of that contract, you need to be engaged with the 2 realtors, and again on a purchase deal, and explain to them Here's the scenario. Let's first talk about the appraisal. We don't control appraisals. We're not allowed to speak directly to the appraiser. It's very important that both realtors understand that if they're not contacted within 48 hours to set the appointment on that property, that they need to let you know so that you can go through channels to find out what happened. The second issue here is making sure that the comps that they use to negotiate their deal are printed out, physically available for that appraiser when they come to see the property and somebody hands it to them. Because it's a lot better to give that appraiser the information that the two real estate agents used to negotiate the deal so that that appraiser has an understanding of what they were thinking. What comps did the listing agent use to set the value of the property? What comps did the buyer's agent use to argue the purchase side? At the end of the day, it's much easier influencing the conversation down a path with the facts up front than it ever is handing them the information after they've made their mind up on something completely different. So set the expectations, hold everybody accountable, including the customer. Tell them that there may be periods of time that they will be required to submit additional documentation. A processor, an underwriter, somebody may require something, and they're going to have to get it back to you. Always give them back a time frame. If you're calling them on a Tuesday, hey, today's Tuesday the 15th, we need to resubmit this file back on Friday. So if you can get me the information that I'm requesting from you by Thursday at 4 o'clock, I'll have a chance to look at it, review it, put it together so we can make that submission date by Friday. Because if we don't get it resubmitted into underwriting on Friday, we could run late of the closing. Every day that we run late of closing, the potential of putting that closing off, okay, goes day by day. So keep in touch with people on both sides as best you can. Communicate with them. Let them know where you are. Some of you work for companies that have automated systems that take care of this for you. Do not rely purely on the automated system. Pick up the phone every once in a while and engage the other side. Why? Because that's a potential referral partner. And certainly share the joy of closing. If you've done what you've promised and the deal closes, take your victory lap. Celebrate the fact that it closed. If you can't make the closing, then make sure you communicate with your buyers and the listing agent and the buyer's agent. If any of those people are people that you have not done business with before, send them a card or note, not an email, a physical piece of mail. Send it to them, expressing how much fun it was to do this deal with them, what great customers they were, or what a great professional the other person was, and how you'd enjoy the opportunity to do it again. And then follow up with a phone call to see if you can get an appointment to find out how you could help service their clients. Because again, build your referral network every chance you get. Closed clients are a source. Agents on the other side of the transactions are a source. And the people who brought you to the table in the first place will keep recommending you and referring you if you keep doing a great job and you show that you appreciate that they have done that. Step 6, keep connected by providing ongoing value. This is a key piece. You cannot just keep saying to people, you know, hey, I'm in the mortgage business. Hey, we close loans. We got great rates. We got great closing costs, blah, 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 blah. People are going to go crazy if you keep connecting with them purely talking mortgage. So get engaged with your other professionals. Get engaged with our Merchant of the Month program. Get engaged providing value to your people So strategy here is thank all the professionals involved and share your value-based practice ideas with everyone along the way. We've talked about collecting 9s and 10s. We talked about Merchant of the Month. We talk about these things, and they really should be implemented because it casts a very wide net. It gets you connected with a lot more people, and it gets you connected in a way where you're providing value to everybody you speak to at the same time leveraging your opportunities. Now you're going to meet, all kinds of people. Base your business on value. Provide exceptional value first. Be the one out there giving. Instead of going to a networking meeting and asking, telling everybody that you're the mortgage professional and that you want them to send you mortgage business, how about you start out by saying, hey, I'd like to find out more about your business and how I can best market your business or product or service to my people. It changes the whole dynamic of the conversation. So get involved with exchanging value. Next, make sure you meet with new relationships within 2 weeks of closing. If you had somebody involved in that transaction that you have never met before, make sure you put it on the radar. Send them that card. Call them and try to set an appointment to see them. If you can't reach them, go to their office and drop them another note. Just saying, hey, I loved working with you on the last deal. I'd really enjoy the opportunity to do it again. I was in the neighborhood. I wanted to stop in and see you. Give me a call. Make sure that happens within 2 weeks of closing. Why? Because just like you, that's probably when they're getting paid. Nothing better than to remind somebody that you had something to do with them cashing a paycheck. Always remember that you ask your clients to spread the word. Always tell them, hey, share these value-added propositions to people that you know. If you need more coupons, if you want more people, hey, bring them to me. I'll put them into the database. I'll be more than happy to include them in the value-added propositions that I send out every month. Because if you're not asking your clients to spread the word, if you're not asking them to help you grow your business, you're missing an opportunity. And again, with that monthly value to those closed clients, make sure that at least once a year you're doing the annual mortgage fitness checkup and identity theft screening. That's what that AMFCITS stands for. I didn't want to spell out annual mortgage fitness checkup and identity theft screening. So that's how you get that. So the reality of this is it scheduled? Does your value-added proposition go out every month? It doesn't have to be a mailing. I've got some of you who are out there using video to do this. But whatever it is, you can create an electronic coupon. Whatever it is, it needs to be done on a regular basis, and it needs to grow. Because if you don't provide value, then what happens is they start to forget about you. And we can't have that. We cannot have people forgetting all the great things that you've done just because you failed to stay connected. You've got to have a clear flow. You really do. You have to understand your business. You got to understand the cycle. All right? Scheduled actions and activities lead you to be making contacts. Making contacts with people will lead to pulling credit reports. Pulling credit reports lead to you providing options with people. You providing option leads the way to applications or incubation. Applications and incubation lead to closed loans. Closed loans lead to new actions and activities, and hence the cycle begins again. You know, we've talked about in the past, suspect, prospect, applicant, closed client. then I know that's one way of putting it. I've decided that I want to just throw this out there and even break it down even further. Simplify the process and say, hey, what do we do? Well, we schedule actions and activities, and hopefully that we go out there and we do those actions and activities, and it leads us to contacting new people. Contacting those new people are going to lead us to being able to pull credit. Able to pull credit allows us to share options. Those options lead to either applications or incubation, which leads us to closed loans, which, by the way, leads us to commissions. But let's just leave the money out of it because we can all just know that a closed loan means money. The closed loans also lead the way to new actions and activities, that never-ending cycle of value that you're providing. The annual mortgage fitness checkup and identity theft screening. These are the things I want you to remember because it's important. These are the fundamentals. And sometimes we have very powerful systems and very powerful tools, and we get real busy, and before you know it, we drop the ball because we don't remember to execute the fundamentals. One of the things I wanted to share with you this week is the fact that we've revamped the website a little bit and the client section. The Improve My Tomorrow Coaching website is right here. And I ask all of you to follow us on Twitter and friend us on Facebook and read the blog every Thursday as it's published. Share the YouTube videos, but most of all, I want you to use the tools. Now, as a member of this program, there is a client side of the website. And on that client side of the website are all the ebooks. We're putting up all the coaching sessions, all the white papers, everything that I've done, all the scripts, dialogues, whatever it is. If it's not there, it'll get there because we're still putting new stuff up, and people are asking for new stuff all the time. And as soon as somebody asks me for something and I realize it's not on the website, I'm going to have it added to the website so that it'll be available to you guys 24/7 so that you can go in and use it. Because just like I preach, I want to practice value. You guys are important to me. I appreciate your business. This is about me trying to help you execute the things that I know will work for you, and I've got to live up to that. And so all the tools, I want you to be able to go in 24/7. All you're going to need to do, okay, is you're going to have to get a password. And what's going to happen is that password we're going to change on a monthly basis. So rather than blindly start, sending things to people and throwing passwords around, what we're going to do is we're going to start creating a list of people who are engaged with the service that are going to get the passwords for this, and you will automatically get the changed passwords once a month when we change them. So all you have to do at the very beginning here, all right, is to go to the site or just send me an email, michael@ImproveMyTomorrowCoaching.com. If you send an email with your name and we'll have your email address, and just say, please send me my password, and update my password once a month as you change it, you'll get put into our system, and we will send you the password once a month. The other thing I want you to know is this email, michael@ImproveMyTomorrowCoaching.com. Again, questions, comments, if there's something that you need that's not in that website, there's a question that you have about your business, about something that you want an answer to, or you'd like to talk about, shoot me an email. We will make sure that happens. I will either respond via email, or I will send you an email saying, hey, let's set time to talk. I want to make this site, I want to make this coaching program everything that you want it to be. And I'm following your guidance, and one of the things that people have come to me and asked for is they appreciate being able to send me an email and have a conversation when they find themselves in trouble, or they find themselves not sure what to do, or they want to develop a new source of their business. And as part of this program, that's what we will do. I will send you a time, and we will talk, and we will work together to resolve whatever issues that there are, because that's part of the program. And I want you to stay connected. I really think that this program is going to be really something special. It has been growing, and I appreciate the growth. For those of you people that were here at the very beginning, I appreciate you, because without those first handful of people that started this process, it wouldn't have grown into what it is today. And I appreciate that. And I'm never going to forget that this is where we started, and the way I keep my customers happy is the same thing I tell you to do. I keep trying to offer value. So email me, Michael at ImproveMyTomorrowCoaching.com. It's the only way that you're going to get the password. It'll be the first password. You'll get that, and then you'll be on the list, and you'll never have to worry about it again. In the recorded session, you'll understand here's the call schedule for 2013. That'll be in the speaking. Again, the call sessions will all be there. We'll still send you the link. But if you ever want to go back to something you missed the link, it'll be in the section of the website, the client-only sections of the website. You'll be able to go in, and you'll be able to relive those. I've tried to keep them as consistent as possible so that you guys can have your timing. And I just want to let you know our next session is February the 19th. So, like I said, your password, it just requires an email. The schedule, again, is up here. I appreciate that most of you make the live call. We have an incredibly high percentage of other coaches that I know do this. We've got a much higher percentage of people who are involved in this program who actually make the live call. So either you're really dedicated, or or some of the things that you're doing are working. But I can't tell you, after speaking to other people, how much I appreciate the sheer volume of you that actually sit on these calls as they're scheduled, especially after this time. And you core people who started out a year ago at the very beginning of this know what I'm talking about. We've got a huge percentage of you guys have been doing this through the first year with me, and still to this day, you guys get on the calls, and you're on there, every time, and you very rarely miss. And that means the world to me, because I know that you're out there listening, and by your remarks, I know you're out there executing, and it's working for you, and I appreciate that. So, again, it's a new year, and I'm really, really excited about the possibilities. I thank you all so much for your time and your commitment to this program. I look forward to your emails and your comments, and I'll talk to you guys next month. Take care.